Okay. Hi. Good afternoon, everyone. I'd like to welcome you to this panel session. We are looking at a session on leveraging Islamic finance in advancing climate finance, developments in Malaysia and the rest of ASEAN. The objective of this session is really to share the experience for Malaysia and also other parts of ASEAN in looking at Islamic finance as one of the sort of options to spur funding for sustainable developments and towards achieving the SDGs and other related sustainability targets. With us today, we have a panel of speakers that represent different stakeholder groups. And if I could just introduce perhaps the person most immediate to my left would be Mr. Fadil Muhammad, who is CEO of Maybank Investment Bank. Next to Fadil is Ms. Madalina Muhammad, who is Director of Sustainability Unit for Bank Negara Malaysia, Central Bank of Malaysia. And next to her is Mr. Jeffrey Hashim, CEO of CIMB Investment Bank. And we have Dr. Wayne, Executive Vice President and Head of Carbon Market for Bursa Malaysia. And last but not least, Mr. Eugene Wong, who is CEO of Sustainable Finance Institute Asia. Thank you, speakers, for being here today. I think just to set a bit of context before we go into the discussions, I think we are all aware that there's a huge financing need towards meeting the SDG and the Paris Agreement targets. And I think we are short of time, literally short of time to meet, to initiate the various projects or initiatives that are required in order for us to get to the destination and to realize the ambitions and targets that have been set. In this context, we are looking at other alternatives from apart from the more traditional financing instruments. And for this session today, as I mentioned just now, we will be looking at Islamic finance as one of the means of funding the huge investments required for the sustainability targets. And in this context, Malaysia and ASEAN have had some experience in developing the Islamic finance ecosystem, and we have also have some experience in terms of leveraging Islamic finance to develop the sustainable finance ecosystem within the area and the region. So with that, perhaps it will be good for us to hear from our speakers what would be, we hope would be a sharing session over this next 50 minutes or so. And perhaps if we can start with Madalina, representing the central bank. In the past several years, Bank Negara as the central bank in Malaysia has stepped up efforts to create a conducive ecosystem, right, for development of sustainable finance and climate finance in Malaysia. And perhaps you could share with us some of these initiatives and also how the central bank and the banking sector are utilizing Islamic finance in advancing climate finance.
Thank you, Dato. It's my great pleasure to actually be part of this panel. Well, I'll try to compress my response in 2 to 3 minutes. Well, let me start by saying that sustainability journey for the Malaysian banking system actually began with the Islamic banks back in 2017, and this was when we issued the value-based intermediation strategy framework, and then during that time, we were already seeing the harmful effects of environmental degradation, the effects of climate change on global prosperity, stability, as well as sustainable living. And it became increasingly clear to us that economic prosperity in the longer run cannot exist without social equity and environmental responsibility. And being Islamic financial institutions, their business models should actually be guided or premised by the overarching objective of Sharia, and that is to preserve and advocate the common interests of society at large by preventing harm and maximizing benefits. So this requires Islamic financial institutions to actually do three things. One is to rethink value through a renewed focus on fundamentals of Sharia. Second is to rethink risk by broadening or extending the spectrum of risk beyond traditional forms by looking into environmental and social risk. And third is to rethink human capital. As such, transformation would actually require a major shift in mindset. So in response to that, a group of Islamic banks actually got together and formed what they call themselves as the VBI community of practitioners. And they commit to transform the way they think, the way they operate, and also the way they act. And our two largest banks, I'm actually being sandwiched by both of them, Maybank and CIMB, are actually among the 6 founding members of the COP. And since then, we saw, we begin to see climate risk as well as environmental and social risk being given sharper focus by the VBI COP in their business strategies and subsequently, the broader Islamic financial institutions. And the COP also has been instrumental in developing toolkits, practical toolkits for use by the Islamic finance community. And one of the key things that they have actually come up with is what they call VBI Financing and Investment Impact Assessment Framework, and also sectoral guides. And fast forward, as we begin to mainstream sustainability agenda within the broader financial system, we, Central Bank, actually adopted a 3-pronged strategy. First is basically to prepare the entire financial sector to be the catalyst to support the economy's transition. Second is to cooperate with the public sector in the development of key ecosystem, and also in ensuring alignment of financial sector responses with the national policies. And third is for us ourselves to actually be a responsible corporate citizen and to demonstrate leadership to our regulators. And along with our counterpart, the Securities Commission, we took a partnership approach with the industry through the Joint Committee on Climate Change in 2019, where both the financial regulators and the industry players basically work collaboratively to co-create sensible regulations and practical tools to be adopted by the industry. And Dr. Islan, you are also a co-chair of the JC3. So the JC3 actually looks at 5 areas: risk management, governance and disclosures, products and solutions, capacity building, as well as addressing data gaps. And specifically at our end, the Central Bank has also been focusing to institutionalize risk management and risk assessment through our supervisory activities, and also by setting expectations and issuing guidance documents to the industry. I mean, to name a few, we've issued the climate change and principle-based taxonomy. We've also issued the climate risk management and scenario analysis standards. And we've also make it mandatory for our regulators to disclose climate data by 2024, and we've also announced that we will be undertaking an industry-wide stress testing in 2024. Just a few more points. Now, on the solutions part, we've also introduced specialized funds to facilitate the SMEs to transition, because this is actually the group that is most vulnerable. So we have actually issued 2 dedicated funds. One is what we call the Low Carbon Transition Facility, and this operates on what we call a matching basis with 24 participating financial institutions, including our Islamic banks, to help SMEs to transition. Second is what we call the High-Tech and Green Facility, and this is basically to assist SMEs and startups for them to grow their business or to invest in strategic sectors. And just yesterday, the JC3, in collaboration with a number of strategic partners, has launched the Greening the Value Chain pilot program. So this is basically a program where we blend or we combine finance with technical training, and this is actually important because and this is actually targeted for SMEs that are involved in export-oriented industries, and it's important because it helps them to be able to measure their ESG emissions. So the other final point is there are also efforts currently to pilot what we call climate smart agriculture financing and protection solutions. And we are working with the industry for this.
Thank you, Madalena. There's a lot of initiatives that you're sharing with us. Perhaps let's not stop there. Let's go to Bursa and Weni. Perhaps you can share some of the sustainability-related initiatives that have been undertaken or currently being undertaken by Bursa Malaysia as the National Stock Exchange, and how you believe these initiatives will help companies that are listed on the exchange. And also, I suppose for those who are not familiar with Bursa Malaysia, Bursa Malaysia itself is listed on the exchange. So in that regard, how do you walk the talk and also sort of set the standards for other PLCs as well?
Thank you very much, Dato' Islan. And also, of course, for giving Bursa Malaysia this opportunity to be in this very important platform. And I think with regards to the ESG related initiatives, for a start, I think Bursa Malaysia has always been a very early adopter and as well as a very strong proponent with regards to upholding high ESG standards. And that is really the primary driver is to ensure that the public listed companies in our stock exchange remains relevant for future investments. So the kind of initiatives that we have actually launched is that even as far back as in 2014, we've come up with sustainability reporting framework that basically requires PLCs to actually improve their climate-related and also sustainability-related disclosures. And today, all PLCs are doing that disclosures in their annual report. And in September, 26th of September this year, Bursa actually released our enhanced sustainability reporting framework, which basically mandates that by a certain timeline, PLCs, especially the main market PLCs, will be obliged to meet them. So for example, for financial year ending 2023, all common sustainability matters must be disclosed together with their indicators, together with 3 financial years worth of their performance data. And this kind of data would also need to have a statement of assurance, either through an internal audit or even better if there can be a third-party verification of data to provide credence on the performance of this sustainability data. And also, of course, by financial year 2025, there will be a requirement for PLCs to actually have their climate disclosure aligning with the TCFD. I think this in quite a number of the jurisdictions that have actually adopted this TCFD aligned disclosure. And separately, of course, back in 2006, Bursa has already worked with FTSE Russell to come up with their own FTSE-related indicators. And of course, the indexes for the FTSE for Good has actually helped many companies. So prior to me joining Bursa, I was with actually an upstream oil and gas company that's listed under Bursa. And when you come from such carbon-intensive companies, it does help to actually be part of this FTSE for Good rating, especially when you approach financial institutions who really require to see that you are doing some efforts on it. So companies who manage to, especially if you get into the 4-star ratings of the FTSE for Good, it's a very big help. So I can actually stand on both sides of the coin, even though Bursa sustainability requirements are always tightening. And of course, when these results, when this framework come out, at first it is really quite painful for the companies to adopt, but it's really for the betterment of it, then it will help to actually ensure that the cost of capital is manageable.
Right.
So aside from the FTSE for Good and the sustainability reporting framework, Bursa is a listed company, as you mentioned, so we really need to walk the talk. So in terms of walking the talk, the largest of our emissions actually come from the Scope 2 emissions, meaning to say that it's largely from the purchase of electricity from tenaga. So in order to bring that kind of carbon footprint down, there are several interventions that we are actually still putting in place. One of them is actually we have conducted an energy audit and will be actually putting in energy efficiency measures to bring down our own energy consumption. And secondly, we are also looking to actually put up solar PV on the rooftop to actually increase the consumption of renewable electricity, as Tenaga's electricity is actually quite a large part of it, 60% is from coal generation. And aside from that, since 2021 for our sustainability report, we have actually aligned our climate disclosures with the TCFD. And recently, we have also received board's approval to actually make a submission to the Science-Based Target Initiatives so that we can also align our climate disclosure with the SBTi. In terms of the governance structure, we have the Risk Management Committee that oversees climate and sustainability related risks, as well as we have the Sustainability and Development Committee that looks at strategic matters relating to sustainability. So I think all these are us trying to lead by example, so that the others can see that we are not just talking, but we are actually doing the work as well. Thank you.
Excellent, thank you. Thank you for sharing those initiatives. Perhaps, well, we've heard from our central bank and the exchange. Maybe we'll bring in our two bankers on the panel. And from a private sector perspective, obviously, both institutions that you represent respectively have also undertaken a number of initiatives to not only make your own institution more sustainable, but also the businesses that you run, right, and how you engage with your customers. So perhaps, and also both Maybank and CIMB operate in ASEAN, among other places apart from Malaysia. You have wide presence in ASEAN. Perhaps you could share, some of the initiatives that we undertaken, including in ASEAN, and whether you need to take sort of different approaches in the different countries within ASEAN in promoting sustainability. Perhaps we could start with Fadil.
Good afternoon, Dr. Islan, fellow panelists, ladies and gentlemen. Thank you for having us on this panel. Sustainability is one of Maybank's strategic priorities, now further emphasized in our enhanced M25 Plus strategy with our ambitions to drive leadership in the sustainability agenda and also to become a global leader in Islamic banking. Besides reducing our own emission levels, one of our sustainability commitments is to mobilize 50 billion ringgit in sustainable finance by 2025. Maybank is the first bank to establish Scope 3 finance emission baseline this year. We also identified a transition strategy that will shape our future business portfolio. The aim is essentially to provide and to support our customers to decarbonize. We want to also accelerate a rollout of differentiated investments in sustainable financing and also lead capabilities and capacity building within the industry. And we actually saw this early on, and sometime last year, we set out a dedicated sustainable finance team within our investment bank that is actively involved in product ideation, structuring, supporting clients in terms of setting out their frameworks, connecting clients to ESG investors, engaging and also thought leadership. And within our equities business, we have a specialist regional sustainability research team that publishes country ESG compendiums and regional sectoral ESG reports. And almost all companies under our research now comes together with our ESG tear sheets, we call it, that comes together with our research. We do on the point of different markets, we do observe varying different approaches within ASEAN. In more matured markets such as Singapore, Malaysia, Thailand, Indonesia, the capital markets play an active role in promoting sustainable finance. And as a testament, in recent years, there has been many inaugural government-led sovereign corporate bonds and sukuk issuances from these countries. Some deals that Maybank has been involved, we've had the opportunity to support, includes Government of Malaysia's Sukuk Prihatin. We also have been a key player in green bonds issued by the Singapore government, Singapore Housing and Development Board, and as well as PT Bank Negara Indonesia. And amongst the local corporates, we supported MBSB Bank, TNB Janko recently, and the Amanat Lebuh Raya Rakyat, the latter being one of the largest issuance to date under the Securities Commission SRI framework that was launched a few years ago. I must say that Malaysia stands out amongst its regional peers in terms of being proactive, in terms of developing local guidelines. We have DSC to thank for being very early in terms of developing the SRI and SRI-linked Sukuk framework, which have been instrumental in catering to local considerations. In August this year, Maybank launched our own sustainable product framework that is aligned to regional and international principles and standards, and that provides clarity in developing green, social and sustainable products. Our frameworks also specifies eligible transition activities for 8 hard-to-abate sectors in line with ICMA's Climate Transition Finance Handbook and the decarbonization pathway set by the Transition Pathway Initiative. This is just the beginning, and there is a lot more that we can do to level up our capital market in our race to net zero. I'll pause here.
Okay, thank you, Fadil. Perhaps I could get Jeff to share your experience from the CIMB perspective.
Sure, thank you. Good afternoon, everyone. So, CIMB, for those who are not familiar with Southeast Asia, we are the second largest banking group in Malaysia, top 5 in ASEAN, and one of the largest ASEAN-based investment banks in the region. So, with that footprint, we do take it upon ourselves that we have the ability to push the sustainability agenda, as well as be able to be an advocate for sustainable financing. So, firstly, our commitment as a bank, we did already surpass our initial commitment for sustainable finance, and in September this year we doubled that to 60 billion, the highest of any Malaysian bank. And on top of that, like Maybank, we have also published our Scope 3 finance emission baseline. We're the first Malaysian and second ASEAN bank to announce climate targets, where we have announced 2030 targets for 2 of our most carbon-intensive sectors, which is thermal coal mining and cement, in alignment with globally recognized 1.5-degree climate scenarios. We have introduced new products into the market to also enable our clients to join this journey with us. Sustainable term investment accounts in CIMB Islamic, where it's a purpose-driven investment offering for businesses and SMEs. In CIMB Niaga, we have a sustainability market-linked deposit for customers who seek to invest in green or environmentally friendly financing projects. But that being said, we do recognize that this space is evolving. We need to collaborate and still learn from global leaders. So we have proactively involved ourselves in recognized partnerships and alliances, being the first ASEAN bank to join the Net Zero Banking Alliance, and only ASEAN Banking Group to be the drafting member of the UN Environment Programme Finance Initiative Principles for Responsible Banking, right? So besides these ESG-focused banking initiatives, we have also been playing an active role in advocating sustainable practices among businesses. We have a flagship conference called the Cooler Earth Sustainability Summit. It started in 2019 with 1,200 participants, and in September this year, We had 6,000 participants across ASEAN. It is a flagship sustainability conference for Southeast Asia, and it is an encouraging development. It indicates greater interest among the various stakeholders across ASEAN. We have also mooted, along with our partner Impacto in 2019, the CAO Action Network. It was established in 2020 and now has a membership of close to 60 companies in Malaysia. And these are the 60 largest companies, and we hope to shape policies and create an ecosystem that champions sustainable business and sustainable action. Right. We have also co-authored JC3's task force on climate-related financial disclosures, and ourselves published our first TCFD aligned sustainability report in 2021. So on the second part, and whether we have a different approach for the different countries, we do localize our high sustainability risk sector position statements to meet the relevant guidelines in the countries that we operate. We do develop an internal taxonomy for our frontline bankers on the eligibility criteria for green, social, sustainable impact products and services. So this framework we call GSIPs to help them identify projects and transactions that support sustainable development while mitigating the risk of greenwashing. So this GSIPs framework is localized to each country, and they also use it for reporting to the respective central banks. Yeah, I'll pause there. Thanks.
Right, thank you, Jeff and Fadil, for sharing the initiatives at your respective banks and banking group. Let's stay on the ASEAN theme, but perhaps to go slightly a bit granular into transition finance in particular. And yes, Eugene, you worked quite a lot with members of ASEAN, primarily the regulators and the governments, but also in the private sector in this region. Perhaps you could share a little bit about, from your observation, how are the developments of sustainable finance, particularly transition finance, being undertaken, particularly initiatives by the public sector and the regulators. And perhaps if you could also, in line with the theme of our session today, maybe provide your view on whether in the various parts of ASEAN, Islamic finance can actually play a significant role in trying to further the transition finance in this region.
Thank you very much, Dr. Islan. So we must first look at transition as what it really is. So transition is actually the balance between ambition and reality. And the reality for ASEAN and for many developing countries is very different from the developing countries. So it's absolutely important, as the central banks of ASEAN have said in their report on the role of central banks in climate and environment risk, as well as the capital market regulators in their two reports, that whatever we do for transition must result in an orderly, gradual and phased transition that doesn't cause any social or economic dislocations. And whatever financing we provide must facilitate this. So it is important at the outset that we recognize that frameworks for any form of sustainability financing should not start off being punitive. They should start off being encouraging. And that's something I see a lot of what the ASEAN regulators are trying to do, encourage and facilitate. So many things are happening on the ASEAN front. As you know, the ASEAN regulators and policymakers, which includes the central banks, the insurance regulators, the capital market regulators, and the ministries of finance, are trying to build an ecosystem in ASEAN. And that ecosystem comprises three key pillars. The first is a common language, so we all know what we're all talking about. There's a big joke going around that the thing ASEAN countries have most in common is actually fried rice. And you still can't get the same sort of fried rice in every country. The second is for us to be able to understand and agree on what transition is. Otherwise, we're all looking at very different things. And the third is really on disclosures, because you can't have transition, you can't have taxonomy unless you have the disclosures to back it up. I think my fellow panelists have raised that point. So Then, of course, you need to bring the players, being the providers of capital and the users of capital, to come in and make sure that capital flows, because you can have all the structures you want, but if you don't, as Madalena rightly pointed out, catalyze the action, there's actually no point having any of it. And I think Fadil also talked about credibility. It's really important that we have credible frameworks as well. So the first thing that on the ASEAN level, where the financial policy makers and regulators have come together under the supervision of the ministers of finance and the central bank governors, is actually to ensure that we have a regional taxonomy, because every ASEAN country is going to have the opportunity to create a national taxonomy to meet national interests and priorities, but that may fragment us further. So if we want ASEAN to be an asset class, as the ASEAN Green Bond Standards, ASEAN Social Bond Standards and Sustainability Bond Standards have done, we really need to have an umbrella. We need to be able to bring everyone together to create the ASEAN asset class. The second thing which we have to do is actually have a common understanding on what transition is, and again, through the Taxonomy Board and the efforts of the Taxonomy Board, which has been created to support the ASEAN taxonomy. So it's officially called the ASEAN Taxonomy Board. This is also being looked at together with separate efforts from the capital market regulators and the central banks. And the third is the disclosure effort, which, as you know, in ASEAN, six of our countries have disclosure requirements already. But now we are trying to make sure that that information goes out. And also that our capital providers actually understand what it's going to take to help orient capital towards sustainability. So before I go on, I just wanted to come back to Dato' Islan's very important point, which is, so what does all this have to do with Islamic finance, right? I read a lot of articles saying that this is the time for Islamic finance, we should use Islamic finance for our sustainability journey. But my question always is, why Islamic finance? Because, you know, Islamic finance is going to cost more. There's going to be structuring costs, there's going to be review costs that you don't have in conventional structures. So if you're going to lay an ESG type transaction over Islamic finance, you're talking about 2 times the cost. The big question is it worth it? My answer is yes, it's worth it, right? Because we never look at the demand and supply side. Firstly, there's a lot of demand for Islamic products. Why? Well, if you look at it, there have been reports to say that Islamic ESG sukuk actually have 4.4 times average over subscription rates compared to non-ESG sukuk, which is at 3.3. So this shows there's an interest from investors. And why is that so? I guess when you open up Islamic ESG products, you do 2 things. So firstly, is Sharia investors who are interested in ESG get an opportunity to invest in the ESG products. Non-Sharia ESG investors also get interested because of the ESG component. So you're opening yourself up to another new, very broad group of investors you never had. And we all know, while we talk about greeniums, it's not just about the greenium. It's also about the subscription base. It's also about your investor base. And people like that. Then what about supply? Well, supply is actually going to be very important because OIC countries need 700 billion to 1 trillion US dollars to meet the SDG needs. And you know, we're not achieving our SDG targets by 2030 in this part of the world. So if you actually use Islamic sustainable finance, you will be able to address the gaps. You will have to do it. There's very little choice in that. And I guess, you know, to do this, governments need to incentivize in different ways. One is, of course, by providing frameworks. It comes back to Fadil's point about credibility. You make life easy for investors by making things credible for them, that they don't have to think too hard. That comes through the taxonomy. It comes through credible frameworks like the SRI-linked Sukuk framework that the SC has put out, or the SRI Sukuk framework. It comes out through things that the ASEAN Capital Markets Forum is doing for the regional regulators, where they've actually released a SLB bond guideline, which can be used for Sukuk as well, just last month. So the first is to provide credibility through frameworks, as Madalena said, so you can catalyze action. It's easier for the investors. They understand this is credible, it's going by the right framework, and the disclosures are good. But also when you put frameworks out, it also catalyzes on the issuer side, because issuers don't understand what it takes for them to be sustainable or what it takes for them to be green. So you're providing them guidance, they don't have to guess. The second type of incentive you can give is actually to provide subsidies. So Singapore has a grant, for example, to set off the external review costs of sustainability-linked loans and sustainability and green bonds. Malaysia has the same. Thailand also has some incentives, and Singapore also has incentives, for example, to allow banks to create frameworks. So these are very important things, and I think that leadership from government is important to set the tone. So I'll just stop there, Dr. Islam. Thank you.
Thank you, Eugene. So just to add, I mean, Eugene mentioned about the sustainability-linked bond standards that ASEAN has issued just last month, and Malaysia has also issued a sustainability-linked sukuk, or what we call it domestically as SRI-linked sukuk framework at the end of June. And again, this is to facilitate transition finance, particularly in Malaysia, for Malaysian businesses. Maybe you go back to Malaysia and transition. I think the other mechanism that helps in transition is actually the carbon market. Right? And Weni, Bursa is developing a Sharia-compliant voluntary carbon market. Can you perhaps share a little bit about this initiative and how Bursa feel or think this would help companies in the transition towards sustainability targets?
Thank you very much, Dr. Islan. I think on this note, if I could just request for my slide to be up, then I think it will make explanation a lot easier. I think first of all, Dr. Islan, the requirement for SEDA to actually set up this carbon exchange is really a mandate from the Malaysian government, and it was actually announced. Hello. It was actually announced just prior to the COP26 in Budget 2022 last year, that the Malaysian government will finally implement a voluntary carbon market. And in the same announcement, the Malaysian government also informed that they are looking into compliance markets such as the emissions trading scheme as well as the carbon tax as well. And the mandate given to Bursa is that this VCM needs to be implemented by the end of this year, meaning to say that it's only next month. I like to say it's end of next year because it sounds really far, but the reality is that it's only next month. Yes. So essentially, if you can look at the slides here, on the right-hand side, it's actually telling about the salient points about the VCM exchange. I think first and foremost, we are very proud to actually announce that we actually are going to have the first world Sharia compliant platform, as well as the standardized product that will be traded on our platform. So a very quick rundown on what we are actually offering on our platform is that we will be providing trading in 3 modes. One would be the continuous trading, spot exchange trading on the carbon credits on standardized contracts. So for standardized contracts, what we are meaning is that carbon credits that are of a common attributes, they will be actually grouped together under a standard product. So standard product would mean that if they are from nature-based, that would be actually under one product, and all technology-based will be under another product. And we will also provide product differentiation, and this is actually not provided in other trading platform. We do recognize that Malaysian credits are very highly valued, largely because our nature-based solutions especially, they are actually perceived to be of very high quality. So we are going to differentiate credits that come from Malaysia and the rest of the world. So if they come from the rest of the world, we will term them as global, either nature-based or global tech-based. And also importantly, as far as the vintage of the credits are concerned, we will be complying with the best of practice, aligning with the COSIA program, which is recognizing credits that are not older than 2016. For the moment, if you look at the slide here, we'll be recognizing credits that come from the VERA registry. And the VERA registry basically provides 70% of the voluntary carbon market share in terms of being a standards provider. But in subsequent year, we will also adopt other registries such as the gold standard and the R3s. So yeah, importantly for our platform, both our products and also our exchange, we have received a Sharia pronouncement on them. So I think in terms of how this is going to help our country to achieve our net zero plan, the narrative has always been that voluntary carbon market space provides another mechanism for channeling of private investment funds into projects that will help country achieve their NDC. So that is a very powerful narrative. Although at the moment the market share for VCM is still very small, but we can see that the trend is that it's growing. Comparing 2020 to 2021, the market value has actually doubled. And because companies, more and more of them are pledging towards carbon neutrality and net zero, we can see that the demand for carbon credit will grow and the prices will increase. So this market will grow importance in time to come. So that's why Malaysian government put this in place to actually provide an avenue for Malaysian companies to be ready for the future. So I'm going to stop there.
Okay.
Thank you very
Thank
much.
you very much. I think that's very informative for us to know. So we've actually heard, various initiatives being undertaken at the Malaysian level by the public sector, private sector, the exchange at ASEAN level. Perhaps what we need now is to see the practical side of it, right? And one way to look at that is perhaps for maybe our bankers to share with us, some real life transaction that you've actually worked on, the sustainability related transaction that perhaps you can share with the audience. Maybe Jeff, would you like to do that?
Sure. And it's also, I think Eugene mentioned a lot of this as well. I think in Malaysia we use the SRI framework to basically leverage on our already well-established Islamic finance framework, regulators and regulation, and something that investors are already familiar with, and grow sustainable finance through that. And if I could offer some statistics, I think when it was in 2018, ESG sukuk issuances out of Malaysia made up 6 to 7% of global ESG sukuks. Year to date, we are now close to 40%. So it has worked for Malaysia. And as Eugene mentioned, it is a very deep market. And the demand is there not only from Islamic funds, but as well as conventional bond funds. So I would probably give two examples just to make that point. Number one was probably in 2021, we were still struggling with the lockdowns with COVID, but the government of Malaysia issued a sustainable sukuk. It was a $1.3 billion deal over two tranches. Tranche one being the sustainability sukuk. And what's good about this is, the 800 million garnered, or the 1.3 billion of issuance garnered at its peak 8.8 billion of demand. So during a time where COVID was still prevalent, markets were still challenging, the demand for the bonds was really, really amazing. And the impact of that to pricing, even all of that, it was the lowest ever USD yield achieved by the government of Malaysia, lowest ever spread to US Treasuries achieved by the government, and it was the lowest ever 10-year USD sukuk offering in terms of yield. That is in addition to being the first USD sustainability sukuk offering by a sovereign. So being first, typically there are risk premiums, but this transaction shows that the demand for Islamic and sukuks and sustainably linked sukuks was very deep. The second transaction was earlier this year. I think we did another one for the government of Indonesia. This was even larger. So this year there have been a lot of rate hikes. Markets were not that constructive for bonds, but we still launched this product for the Republic of Indonesia. It was it's a 3.25 billion sukuk for Indonesia. It's the largest ever global sukuk by Indonesia in history, and it's also the largest ever green sukuk printed globally. So this was a 1.5 billion green sukuk. So It's also the first green sukuk tranche in a 10-year tenor. We had over 200 names, and it was multiple times covered, even this year. So, just making Eugene's point, the market is deep. If it's even for sukuk, we saw demand from both Islamic funds as well as conventional funds. And yeah, I'll stop there. I think it just shows the success of this space and that it can work.
Right. Thanks, Jeff. Perhaps, Fadil, do you want to weigh in on this? Maybe you could share one
Sure.
example
Sure,
from
thank
the
you.
Maybank perspective.
We've been very fortunate to have been involved in many milestone transactions, particularly where it involves the Islamic sukuk market and also where it converges with the sustainability guidelines and the SRI sukuk framework. And on that, maybe I'll just use 2 or 3 examples here. One, of course, is recently we issued earlier this year. We assisted MBSB Bank to raise a program of 5 billion ringgit sustainability sukuk wakalah program. It's first of its kind by an Islamic bank in the world. This will help essentially to deploy sustainable capital from MBSB to borrowers to support them in their businesses. So not everyone has access to the capital markets, and by this issuance, it allows MBSB to raise sustainable capital that will support them to deploy to companies that don't have access to capital in the form of loan capital in this instance. It received 11 times bid to cover ratio during the book building process, showing tremendous amount of demand. The other example which I like to highlight is also the recent Amanat Lebuh Raya Rakyat deal, which is a 5.5 billion SRI sukuk, the first highway related issuance under the SRI sukuk framework, and the largest in the Malaysian market to date. And that was a deal CIMB was involved with us also, together with a few other banks. And it was an innovative structure, first of its kind, and very happy to see tremendous amount of demand, or rather happy to see that the market was very receptive to an innovative type structure that came through. And on the regional side, we have been involved in, as I mentioned earlier, Singapore Housing and Development Board's 1.2 billion ringgit green bond, the third and largest to date, and PT Bank Negara Indonesia 5 trillion rupiah green bond, largest AAA rated IDR green bond to date, and in Vietnam, VinFast 500 million syndicate green loan, a Vietnamese automaker venturing into smart vehicles. Happy to say that we continue to see very strong demand, and we continue to see issuers going out looking at GSS sukuk, green, social and sustainable type sukuk, and transition related instruments gaining traction in the market.
Right. Okay.
Thank you.
Thank you, Fadil. And Jeff, perhaps I think one of the things that was been mentioned during the last few minutes or during this session is taxonomy, right? And I think this is important development in any sustainable finance ecosystem. And in the context of Malaysia, perhaps Madalena, Bank Negara has introduced the CCPT, right? The climate change principles-based taxonomy. Perhaps if you could share maybe a little bit about how Bank Negara would anticipate this taxonomy would help spur development of sustainable finance and climate finance in Malaysia.
Sure. So, well, as you pointed out, Dato', so, when you talk about taxonomy, it is actually, a key building block. So, and so is the climate change and principle-based taxonomy that we've issued. And as Eugene mentioned earlier, it does provide a common language. It does provide a system, common system for classification of risk. And because we are talking about a new area, and we're talking about, many of the players are at the early stage. So having that common language is going to be very critical. It does promote consistency, and you've mentioned also about credibility. For the taxonomy itself, it does comprise of five guiding principles, and it is essentially a transition taxonomy. And the guiding principles recognize the importance to adequately manage climate related risk and to support the transition while taking into account the state of economic development. So again, just to echo what Eugene mentioned earlier, because as a developing economy, we also have our domestic priorities, and at the same time, a lot of our businesses are at this early stage. So what we want is really to get, them to start on this journey rather than, put them off and not do anything. So also, to echo what Eugene has mentioned earlier, is that, as the catalyst, we do expect our financial institutions to actually play a nurturing role and assist their clients towards embracing sustainable practices. And, with such a nurturing approach, what is key is really, to avoid any disruptions to the economy, to avoid any premature dislocations or displacements, of the vulnerable segments within our economy. And this is something that would actually be pretty common across, the emerging markets and developing economies. So what we really want to achieve is really to make sure that as we transition, it is one that is actually just and orderly. And so I think that is what we are focusing on essentially. Yeah.
Right. Okay. Thank you, Madalena. And I think perhaps we could go back to Eugene, and we talk about taxonomy. We cannot not talk about the ASEAN taxonomy, right? And here, how do we ensure, or how important is it to ensure that a national level taxonomy sort of fits or align with a regional taxonomy which ASEAN is developing, and also perhaps how do you see that the ASEAN taxonomy being a driver for further development of sustainable finance in the region?
Thanks. Before I answer that question, I hope you don't mind, but I wanted to add on to what Jeff and Fadil had said. And this is something I myself have learned about the suitability of Islamic finance for transition financing. The two things which are often forgotten, but I think investors appreciate it. We have a group of investors who see that Islamic sustainability instruments actually provide double protection. Because you have, well, we all know Islamic finance and sustainability finance have big intersects. They're also different in other ways. Like, for example, you could have an Islamic compliance structure for a coal plant, which you probably can't do in an sustainability structure. But the fact of the matter is that Islamic finance also does prevent other things like speculation, interest, and you don't have finance for the sake of financing, which we all have bad memories of. So if you have a double lens put over Islamic finance and ESG, it's actually doubly safe. The second is some Islamic finance structures are actually very suitable for transitions. For example, the sustainability-linked sukuk and loans. Because of the tenet of reward and risk sharing in Islamic finance, you can actually adjust the KPIs and the impact through these instruments. So again, it's quite suitable for it. I just wanted to add that because I felt it's really important points that Jeff and Fadil had raised. So coming back to the ASEAN taxonomy obviously is an overarching guide. It's a common language for all 10 countries. It's a universal translator for ASEAN. But not only must it translate and connect all the 10 ASEAN member state taxonomies, it must also connect with the global taxonomy. So if you look at it, at the bottom it's connecting the 10 countries, above it's connecting ASEAN towards the global taxonomies. And the important thing about the ASEAN taxonomy is that it's an inclusive taxonomy, because this was the mandate that was given to the ASEAN Taxonomy Board. Make the taxonomy inclusive, make the taxonomy facilitate transition. And these are the key two tenets that we have. in essence, we have an interoperable taxonomy with EU taxonomy, because if you look at the design of this taxonomy, it is actually has 4 environmental objectives. The EU has 6, but they're essentially the same. We have a DNSH criteria. We also have a classification system that uses ISIC. The EU uses NACE, and these are easily comparable. And importantly, we have an element called remedial measures transition, and this, of course, though, is something that the CCPT has and was adopted in the ASEAN taxonomy. Because again, no, the point is we want to encourage people to use this taxonomy, not punish them for not being able to meet it. So we have to allow transition. And this is an important thing to remember. The second is that we see that many taxonomies today, including the EU taxonomy, go straight to a binary decision. Are you eligible or are you not? And it's quantitative. There are thresholds. The ASEAN taxonomy actually has 2 elements. The first is a foundation framework, which really, if you look at it, it's very much similar to what the CCPT is. The second element is actually a plus standard, which is very similar to a technical screening criteria like the EU's. But we have a difference, and as you know, because our ASEAN member states are very, very diverse. The highest GDP per capita per annum is 60,000 and the lowest is 1,300. So can you force everyone to accept the same threshold? You can't, because that's not inclusive, and the mandate was to be inclusive. So what we have is we have different thresholds that can be used by our member states. For example, for energy, we may say that the highest, most ambitious threshold is 100 grams per kilo hour, but we could also allow 200 and 300 so that member states can start using the taxonomy today. But we don't want them to forever stay at 300 or 200, so those thresholds will be sunset over time, and essentially we force people to chart a journey to move themselves to the highest ambition possible, but we give them time. So we're not, again, to Madeline's point, causing any social or economic dislocations, which we have seen in other countries because we saw the energy crisis in the EU and in China. We've seen the hydro dams drying up in China, and we've seen the impact of the Ukrainian war. So we are trying to make this taxonomy, firstly, a translator and interoperable for our member states. We are trying to make this taxonomy the center of interoperability with the global taxonomies as well.
Thank you, Eugene. Perhaps quite conscious of time. Perhaps I could go to our last question, which I'll address, like all 5 speakers to perhaps respond. I think it seems that the panelists have highlighted the potential for Islamic finance to be sort of one of the mechanisms or one of the avenues for stakeholders and for the world essentially to utilize or consider in raising finance to fund the increasing, need, or rather the huge need of sustainable finance in order to achieve the SDG targets as well as Paris Agreement targets. On that note, perhaps if each speaker could then very quickly highlight what do you think is an important element for us to mainstream Islamic finance for that purpose. Perhaps if I could start maybe with Fadil.
Thank you. Let's look at it from both a supply and demand perspective. I think from a supply perspective, we should seize the opportunity for Islamic finance to be an additional avenue to approach issuers. And building on a lot of our clients' familiarity with Islamic finance, sustainable financing can be repositioned as less foreign and complex. And I think issuers are also able to develop on the innate positive social inclinations associated with Islamic banking and Islamic finance. And I think on the demand perspective, Sharia compliant sustainable assets will continue to appeal to investors, particularly those with exclusive mandates for Islamic finance, and sustainable finance products will definitely fit perfectly, especially for those who are looking to expand and diversify their portfolios. In short, emphasizes very clearly from the inclusiveness and social impact. This clearly harmonizes from both the E and S perspective, which is central to developing countries' efforts to transition. And hence, Islamic sustainable finance has great potential to grow into mainstream. So that's my take. Thank you.
Well, I have 3 points. One is to really optimize Islamic finance instruments to finance transformation, and this would involve intermediating diverse value-based capital, to support the growth of future industries, particularly those industries which would actually be very critical for us to transition. Second is in respect of measurement of impact. I think one area is really to strengthen this, and in fact, this is actually an area which the central bank is currently working with the industry along with other international bodies such as the World Bank to actually improve the measurement of impact and disclosure practices. And I think this is going to be very critical because we've often heard about greenwashing, impact washing. So these are the things that would actually be critical. And the third is in terms of strengthening the data infrastructure and to leverage technology to improve risk assessments, to improve solutioning. And I think that is going to be very critical.
Thank you.
Thank you. So, whilst we are quite encouraged by the success that we've had for Islamic finance and Islamic capital markets over the years, I do feel we still have to make it mainstream. We still have a lot of work to do on the both supply and demand. Although we can see it's already accepted by even conventional funds. What we need now to do is to expand the supply universe to more issuers, more different classes of issuers, different sectors, to offer variety, and as well as on the product side. I think in addition to Sukuks, there are many other parts of Islamic finance that we can also increase the depth and breadth of products and supply. So I think with that, we'll move towards being critical mass and be a more comprehensive template for others to follow. Yeah.
Thank you.
I think without a shadow of a doubt, banks are very powerful agent of change. In terms of especially for Islamic financing, Malaysia is really home to the largest in terms of the Islamic financing. Back in 2017, Malaysia is the first country that actually issued the green sukuk for the large-scale solar farm. And I think that's why in COP27 this year, the key focus is really to unlock financing. And if I could just share very quickly, one important key takeaway that I have moved around within the COP in the last couple of days is that the narrative for buying carbon credits, most companies would think that I would only purchase carbon credits to meet my residual emission gap. So therefore, I will only do so in 5 years from now, 10 years from now, 20 years from now to meet my emission reduction target. But in this particular COP, I realized that the narrative that's been going around is that no, you should actually invest in it now because these projects take time to actually be on board. And therefore, you can't wait until the demand comes and then the supply will not be able to meet it. So therefore today, if it costs a lot for your companies to decarbonize your carbon footprint, the very least that you can do is actually to channel some financing to support carbon projects that will actually help the world, the global movement towards achieving the net zero goal. I think that would be the one key insight that I can share from the COP. Thank you.
Thank you.
I think it's really important for us to let the market understand and not see Islamic finance as something separate, as a faith-based financing channel. That we don't want. We want the market to understand that Islamic finance is another expression of sustainable finance that provides many benefits that normal sustainable finance may not provide. It of course will require more resources, but again it provides benefits that many investors will be happy to accept. So I think that's the first thing. That means that we need to have common frameworks, we need to create awareness, and we need capacity building. And again, as I said, I think the structuring for Islamic finance lends itself quite well to sustainability needs as well.
Thank you, Eugene. Well, with that, I'd like to draw this session to a close. I'd like to thank all the speakers for your valuable inputs. I'd like to thank the audience for staying with us. And I hope that the session has been informative and beneficial for everybody. Thank you very much.